This $1 stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 12th. Trump's energy stocks could help you retire early, and this $1 stock, ticker symbol KITT, Nauticus Robotics, has investment from Shell as well as Transocean. There's another company, Devon Energy, with $4 billion of revenue, ticker symbol DVN, that it contributed some money to Trump or the Republican Party through super PACs, right? So it's not a large amount of money. I'm not even going to state the figure because I don't think I necessarily know it off the top of my head or that it's material. But the point is, all these companies get helped by Trump and the administration. Solar companies also got helped, but these ones in particular are doing really well. Nauticus had that $70 million initial investment from ticker symbol RIG, RIG. It's a big company. They do offshore drilling. And most recently, Trump is rumored to be signing an executive order soon that helps robotics. So Tesla's up significantly on that rumor. All the little robotics companies are up. KITT, this one, as well as RR, Rich Tech Robotics, Serve Robotics, SCRV. So is it a great idea to just go and buy all the robotics companies? I don't know if that's a great idea. Like, sure, you could have said, if I had just bought all the quantum companies, that would have been awesome 6 months ago. Or if I had bought all the Bitcoin miners turned hyperscaler compute providers, that would have been awesome. Yeah, well, if you have a big portfolio or whatever big is to you, sure, you can spray money in all the robotic stocks and you might get a big move. But in my personal opinion, there's a favorable risk reward opportunity for Nauticus Robotics right now, off a risk level, not just putting a bunch of money in there and letting it go to zero if it does. And Devon Energy also is holding up well. They do hydrocarbon exploration, so they look for oil and gas deposits. They're out of Oklahoma. $4 billion in revenue is no joke, and they have $800 million of free cash flow as well. So in the same way as Apple has a ton of free cash flow, this company can use that. ExxonMobil has a ton as well when they're able to sell oil. Prices are favorable. So they were able to pay off $400 million of debt with that. So these companies are looking well fundamentally and technically. Not a financial advisor, but let's look at these prices.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's Nauticus Robotics, $2 million in revenue. The highlight headline would be that that's a 400% increase year over year, but they had $300K of revenue before that. So whatever, it's a spin-off startup, and they do ocean robotic, oil rig exploration, maintenance. So they're seeded by Shell and by Transocean. Just maintaining these oil rigs is expensive, and dangerous as well. So this is definitely a good application for robotics, or call it artificial intelligence if you're trying to be buzzword friendly. But yeah, you could say it's AI. They need software to pilot these, to collect the data, analyze the data. And they've gone to 2,300 meters down, which I'm not a deep sea submarine operator, but that sounds like a lot. They did have $5 million in cash as of the end of September 30th. So if we look at the chart, that's right here. So that's the end of Q3, and then the earnings came out 2 months later. So a little bit of a delay there in all the earnings. NVIDIA being sort of the end of earnings season. So I'm not too worried about this sell-off is really all I'm saying. It's like, you know, the company has pretty much gone down the whole time, right? It's a speculation opportunity. It's a SPAC spinoff, and they were funded with 70 million from. So it's not even worth it to look at this whole move, except to say this is the opportunity. I mean, when there's buying volume, there's really buying volume, you know. So it's a company that can go from 15 to 40 in a day. I'm not saying that it's going to do that, and I'm not saying to hold it long term with the expectation of that. But look at the volume here and look at the volume back here. So the volume here is crazy high. Highest volume ever, I think you can say, undoubtedly. So something to pay attention to. And if we look at the intradaily, we can see a level pretty much to buy it off of. So pretty much where it closed at. $1 is a pretty clear psychological level to buy it off of. Risk 10 cents, look for $1 or more. And you could look around for the more quote-unquote established robotics companies. Rich Tech makes the robot bartender. Serve as well. It's just like what does Serve even do? This is hard to even remember, but you know, they're in the robotics sector, and they certainly are good at raising money. So it looks like they do sidewalk delivery. That rings a bell. So if you see those little robots with like a DoorDash symbol and you live in a city, they look sort of like, you know, Roombas, but outside your house. That's Serve. Believe it or not, that's a massive market, and people don't always want, you know, a person coming up to their door delivering their food. So if you can sort of create a little more distance, I guess it's kind of sick or whatever, and put it in a robot and have it go up to your door. I don't know. The company has hundreds of millions in money raised and the stock looks good. But again, as far as buying it right now, it just went up 3 days in a row from this euphoria on that rumor, and maybe it'll come down in base, but I don't think that's really a good idea to bet on it early. SOUN, little move. These are just the AI companies, so they're sort of tangential to the robotics executive order, but they're worth mentioning at least. But Kit looks like it's most interesting here. In my opinion, it's always a little scary buying a $1 stock, but that's why you have very close risk level. Devon, creating a little shelf here, already showed us what it can do after it moves sideways. Again, they do oil and gas exploration. This is a really clear breakout, so you can risk maybe 25 cents and get a move of $2 or more pretty clearly. It looks like it's creating another opportunity up here to do that. So could it go sideways a couple days? It could. Do you want to get in early? I mean, depending on how it moves the next couple days, if you can find a risk level like this low that works well for you, maybe you want to do a little bit of a cheat entry before the actual breakout. You know, the breakout would be at 38 and change. And if we look at a 5-year chart, I guess this 38 level is pretty much the level until you get up to 41. But instead of finding the exact level, I mean 37.8, I guess you would say is the exact level. Some people like to only look at the daily chart to find an exact level. But I also find, as you've probably found as well, that if you do find an exact level, often what it does is it'll go slightly above that level, say 38.8, and then fail, right? Because everyone is looking at the same exact point, and people are selling into that. So that's where the whole cheat comes in, if you want to call it that, where instead of buying up there, you buy maybe here, and you risk this high of say 37.4, and you buy at 37.6. So that's enough of looking at that chart. I know no one likes looking at someone else's chart, but I hope that helps. And then as far as the company, I mentioned the $4 billion in revenue and the paying off the debt, which is great. Companies that do have debt are literally leveraged, so they can go up a lot. They can also go down a lot on the stock chart. So makes sense. Paying off the debt, I believe, makes it as safer investment. I'm not saying to hold it for 6 months or longer, but yeah, just makes it more stable. So again, not saying that they're going to succeed, but they already have $4 billion in revenue and they're a $20 billion company. So succeed is sort of a relative term. If they really stop spending on capital expenditures, aka basically acquiring oil rights and drilling and doing tests and paying geologists and all that, maybe that's not good for growth. But that's always the balance between everyone wants the company that has super high cash flow and super great growth prospects, and also, you know, the company that's relatively unknown, and that is a unicorn. Literally, right? That's what they call companies that are being funded by venture capital, that are growing super fast, that are spitting off cash. They call them unicorns because maybe one of them succeeds, but if they do succeed, that's usually the point of them being known. So I'm not going to keep talking and blabbering here, but you don't have to pretend to be, you know, the next venture capital whiz. You can just look at a chart of actual buys and sells, which some of them do now as well. They have crossover hedge fund venture capital funds. I don't think they really like putting them together. Some of them do it anyway, but the whole point of public markets is they're liquid, so you can get in and out quickly. And the whole point of looking at a chart, which a lot of people say is astrology, is you actually get to see how a company is actually getting bought and sold and where the price is agreed to be worth. So there's plenty of volume here. There's $150 million of volume. So any fund could, you know, and I use that term loosely, a family office or whatever, could put a couple $1 million in this with the click of a button. They don't need a block trading algorithm or any sort of employee to do it over the course of a few hours, and they won't move the stock. And that's the kind of stock that is stable, because it doesn't just have people moving it around every time they decide on a whim that they want to mess with other people. So that's the advantage of DVN over KITT. Of course, the daily range is the opposite. So KITT moving 20% a day or more is pretty crazy. And DVN moving 2% a day. So those are all the trade-offs. There are similar tickers you can watch to DVN. You can watch the oil ETF. You can watch the price of oil. And by the oil ETF, I'm really talking about energy ETF. Pretty crazy move, but I don't think you can really read into that too much. Sometimes there's just little, like, I don't want to use the word dark pool, but some of the transactions just don't matter as far as the actual price. And in fact, I can just do that like that and get rid of that, so we get a clear look. So it does appear to be setting up. Some people do buy and sell this as well directly, so this technical analysis matters, that this looks like a breakout. And it's going to be reflected in ExxonMobil as well. So This doesn't look like Shell at all, but the big ones are Chevron and ExxonMobil. And ExxonMobil looks good, and the price of oil is going up, which doesn't hurt, except keep in mind they don't exactly follow this. I mean, look at this down move in all of October. If we look at Devon in October, we see that. If we look at ExxonMobil in October, we kind of see it, but it's such a big company that it changes the structure on a micro level, but it's still marching up. So as long as you keep in mind which market cap you're looking at when you look at the literal price of oil, you can kind of get an idea of how much it matters. So it does seem to matter more for Devon, but more so keep a look at this level, 37.4. So those are the two ideas on the very opposite ends of the spectrum, KITT and DVN. If you like these ideas, hit that like button for the algorithm to show them to people like you. And if you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. It's free for subscribers. And if you want to trial the chat, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.